Income tax law principles. Topic 5, income from personal service and employment. As the main type of ordinary income, payment for work done is fairly straightforward. In this topic, we'll look at the receipt in the hands of the taxpayer to identify whether there is a nexus or a connection with the provision of the money or income and the service provided. So this means we look at other income such as prizes, voluntary payments, and unexpected payments or even winnings, and determine whether they can be income. Prizes are not normally ordinary income unless they are the direct result of an income earning activity or reward for particular skill. So where a professional football player wins the best and fairest player prize, this will be considered ordinary income in the hands of the taxpayer and assessable, as happened in Kelly versus the Federal Commission of Taxation, 1985, volume 16, ATR, page 478. Where the prize is for personal qualities not associated with services, it may be a gift, as there is no nexus to the service, such as where a solicitor who received money from a widow of a client he had worked for years ago was given money for that work and just being a supportive person. That came from Scott against the Federal Commissioner in 1966. Then, some benefits that are given are not convertible to cash, and these may be statutory income, which is the next topic we'll look at. These include fringe benefits, and these are taxed differently, as I mentioned the employer pays. Some payments may be considered capital, such as where the taxpayer is paid to give up a valuable right, and this is dealt with under the capital gains tax regime. Payments received for termination of employment will generally be assessable under a separate section, the eligible termination payments provision in Division 82 of the 97 Act specifically. So ordinary income is dealt with under section 6-5, and some non-cash income is dealt with under section 15.2, where it is received from an employer during their employment, such as, for example, a stock item, a television. Statutory income has 3 requirements for it to be taxed under section 15.2. First, there is something given, benefit, bonus or allowance, etc. And second is that it is provided to the taxpayer. And third, it is provided in respect of or for or in relation directly or indirectly to any employment of or services rendered by the taxpayer, although it could be given to a third party, a spouse. Remember, if it is not under statutory income, it may still be a fringe benefit or a capital payment. So there's a bit to consider with this section.